Welcome to Charts Today. It's Wednesday, the 29th of April, and I am in New York. I fly back to London this evening. It is just coming up to 3 o'clock in the afternoon in London. Sorry, this is later than usual, but I was waiting for the US market to open now that I'm here. And looking at Brent crude, we are nudging $117 a barrel at the moment. So that is breaking. And the interesting thing is, if this is the actual contract itself, if we look at the daily chart, we are actually making a new high on this contract and the current contract. But if you look at the rolled chart, so the continuous chart, we are not quite making that high. 119.50 was the high that we saw in the height of the crisis. But we are now back to those levels. And so this prolonged situation in the Middle East, 120 is going to be a pretty big number for crude oil to break. So we are watching that with interest. And we are also seeing European gas markets pushing higher as well. So the Middle East situation is still at the fore. Interestingly, we are seeing equities relatively flat in the US at the moment. We're down 1% in the UK, so quite a significant move there on the future. But the really big story at the moment that probably few people are watching is what's happening in the bond markets. If we look at, first of all, at Japan, regular watchers will know this has been a concern of mine. We are just nudging that 250 level. We're at 247, but a break higher there looks inevitable, and we've got upside targets corroborating that. But perhaps the biggest one is that the UK gilt yield has just risen above 5%. And if we close at this level, that will be the first time that we've been above 5% on the gilt yield since the financial crisis in 2007, 2008. So this is significant. Borrowing costs for the UK government are going up, and it's not just confined to the UK, of course. We're seeing similar moves in Germany, and again, just pushing to new highs there. And Italy up nearly 2% on the yield this morning. Not quite as nudging new highs as the German market, but you can basically see Germany's breaking 3%, Italy's breaking 4%, and the UK is above 5%. Looking at the Aussie market for bonds, that's also got upside targets, and they've been used to being above 5% for a little while now, let alone countries like India, where bond yields have been touching 7%. So it's a really interesting time. So looking at the rest of the market, we've got European bourses slightly down. Japan was actually higher. So confidence is holding there despite the Middle East crisis. The Hang Seng is below the clouds still, and the Sensex in India has put in a bit more of a recovery. Australia, as we head into May, nervous about the budget that's coming and what's going to be in the budget for taxes there. So that's quite key. We're seeing soft commodities also. Well, we're seeing refined products. I mean, I'm in the US at the moment. This is gasoline, and that is nudging new highs as well. And if we look at jet fuel, that's also pushing higher. So all in all, we're seeing upward pressure on refined products, and so that is having an impact on the global economy. Looking at some of the other soft commodities, we've got cocoa, that's up 2.7%, but really a sideways market. Sugar has rebounded and started a new uptrend. So short term, that's looking better, but we look at the weekly chart, that's still a vicious downtrend, and the daily chart, you can see it's seesawing between 13.50 and 16. Grains have been stronger. We put our report out this week. We've broken higher on grains, so that's wheat running higher. And if we look at some of the other products, gold, remember that has been falling back. So this is a failed recovery, looks like, on gold. And we look at the 60-minute chart, those downside target, that target was given at 4750 to 30, and that's where we've got to. So that's the key. You can't ignore the targets. Silver down 2%, with lots of downside targets on the short-term chart as well. A few people asked me about Bitcoin. Just while we're looking at gold, that is looking a little bit better on the daily chart, but we've got to get above this 80,000 level really to be in proper recovery mode. And then looking at just the tech majors, remembering that only Amazon and Nvidia were making new highs. Amazon is back below that level, so it's really struggling to hold on to that high. Google has given a new upside target, which is impressive, and again did nudge new highs there. Nvidia did break to new highs, but again is struggling to hold on to it. This is why I want to see 3 days holding those highs. And for Tesla, that is still in a downtrend below the cloud. Looking at the Dow 30 today, the market's open a screen of red. Visa is up 9%, so that's bucking the trend. You see here lots of stocks falling lower. Concerns about the global economy just starting to weigh. When you look here, you can see quite a few of the bellwether stocks in the US, is Home Depot, really not looking great. So that's it for today. As I say, I will be back in London tomorrow. I'll probably record this from the airport arrivals lounge in Heathrow. And until then, have a great day. Bye for now.